Bill Baruch joins us now. He's making some portfolio moves we wanted you to know about. Good to see you. Okay, so you bought more Microsoft and Oracle. Talk to us.
Yeah, Microsoft is one of the big names I haven't added to since raising cash in July. Obviously, a great earnings report. It's AI here. It's software is being adopted. 1 million users right now, growing 40% quarterly. So I think that's really the adoption and implementing the AI across their software base is important. But it's also yesterday's move got out above the earnings high. And I think there could be a tailwind there. So I want to ramp up that exposure. And then with Oracle, I mean, they're the primary play in database right now. And their adoption with Microsoft Azure as well is already there. They're going to continue to be compatible with other software as well. And the thing about Oracle, after that September fallout, after their earnings report, it never underperformed the Qs. So I think right here, it tells you that it's built a pretty good base. And I want to be there for this thing to rally.
Yeah, how about AMD? You looking at it? Josh made some news the other day when he bought it ahead of the number, and what a reversal that it had after the number. You're looking to add to it at this point?
Yeah, and Josh, kudos. That's a great buy there. I'm waiting to see how this settled out after yesterday's move, after the earnings. Didn't want to chase it. I'm looking at non-farm payroll tomorrow, and if we kind of hold steady, I see myself putting some of my last bit of cash to work with AMD. I mean, right now, the NVIDIA software moat has eroded. And really, I think this adoption with MI300 for AMD is going to continue, and it's going to pick up. And I think that's going to be priced into the earnings. And I expect it to continue to build as a stock that can really take off here into the Q1.
You want to comment here, Josh?
Important to note, the NVIDIA software advantage is very much alive and well. That's the CUDA platform we've been talking about on this show for 9 years. But AMD, to Bill's point, has its own software platform. It's called ROCm, R-O-C-M. And if they can capture somewhere between 10 and 20% of this nascent market, and they could focus more on chips for inference as opposed to chips for training, which NVIDIA has on Smash, this is going to be a company that we're going to be talking about in the AI conversation for the months and quarters to come. So I don't know if it's timed perfectly to buy it right this second, but do not take it off your screen. It's going to be an important name.
Yeah. 15% it's up in a week is AMD. Bill, thank you. Good to see you. We'll see you back on the desk soon, I know. Carrie, to you. You sold Align Technologies. That was one of your Stock Summit picks.
Yeah, well, Align had been a great stock for us. I mean, really, really strong. And what's happened, we know, is interest rates have gone up. Consumer spending on some discretionary. Yeah, that's the Invisalign, okay. the invisible braces.
Yeah.
It had a incredible run for a few years, and it came crashing down. We bought it. Stock was up over 50% for the year. But consumer spending on some goods, not necessarily services, but some goods, has weakened because they're expensive. Cost a couple $1,000 or $1,000 to $2,500 for the whole process. Mm-hmm. And we just thought the quarter could be weak. China hasn't really come back, the spending there, and so we sold it before the quarter, and the stock was down 30%.
Yeah, we'll take a look at it there. It's up about 3.5 today. InMode, you sold that. INMD?
Yeah, so that was a very small position. It's a medical device related to aesthetics. So fat melting and skin tightening. Again, we sold it because these devices are expensive, the lasers, for doctors or spas to buy. And we thought perhaps there's going to be weakness in the market over the next year. It's also an Israeli company. I think it has some risk. I mean, not a lot. Most of their sales are in the United States. And we thought, we can sell it here and buy it back.